Hey, welcome back to YT Finance, and today we are talking about Tesla's TSLA stock, Lucid's LCID stock, and NIO stock. We will start by performing some Tesla stock analysis so we can compare Lucid to Tesla's track record in terms of technology, deliveries, manufacturing capacity, and market capitalization. We will then discuss Tesla stock and Lucid stock price targets and predictions by analysts, followed by the latest stock news for NIO pertaining to some of their upcoming catalysts, their price target upgrades, and NIO Day, which is where NIO unveils their newest technology, vehicles, and battery innovations that will be held this year on December 18th. Go and press the like button right now for more electric vehicle stock news updates. Comment your favorite electric vehicle stock down below, turn on all subscription notifications to stay informed, and now let's get right into today's stories. Some of the most valuable electric vehicle companies on the market right now are Tesla, Rivian, and Lucid, which either rival or even sometimes exceed legacy automakers like Toyota, Volkswagen, Ford, and General Motors in terms of valuation. The graph on screen shows some of these electric vehicle companies' market cap compared to legacy automakers' market capitalization, but clearly Tesla is the winner here with over $1 trillion market cap. While I am surprised about how quickly Tesla reached such a high valuation and stock price, their record truly speaks for itself. In only 3 years, Tesla grew its quarterly deliveries of their electric vehicles from 100,000 units to 250,000 units per quarter. They also have been free cash flow positive since the second quarter of 2020, and they've had positive net income since the third quarter of 2019, which is amazing news for them. However, to me, Tesla's largest advantage over their competitors is their ability to manufacture electric vehicles extremely efficiently thanks to their gigafactories located in California, Texas, Germany, and China. Now, Tesla's TSLA stock is highly debated about online whether or not Tesla deserves or can even grow into their ridiculous market cap, but wherever you fall on that debate, one cannot deny that Tesla is very efficient, profitable, and they're a company that's growing very rapidly. Just look at the 2025 outlook for some of the top EV companies on the market right now, which will lead us to talking about Lucid and NIO to see if they can even compete against Tesla. Now, many of you may not have heard of Polestar, so if you want me to do an analysis video on that company, make sure to hit the like button right now and comment your thoughts down below. According to the chart, General Motors and Tesla have the highest manufacturing capacity, followed by Rivian, then NIO, then Polestar, and then Lucid. Luckily for Lucid LCID stockholders, they also have forecasted them to be able to manufacture up to 135,000 vehicles in 2025, paired with plans to expand into China and the Middle East, which will help them greatly. But for a more current projection, Lucid is aiming for at least 20,000 vehicles manufactured by 2022. Now, Lucid has gained a great market cap of around $90 billion at a stock price of around $54, and I personally think this stock will pull back very hard, but according to these numbers, their valuation cannot be justified until after 2024 at least, because by 2026, they will have over 250,000 vehicles delivered, that's their estimate, and $22.8 billion worth of revenue yearly, on top of a $5.3 billion gain in gross profits. We also have to remember that these are just targets, and these are all forecasts of what Lucid can achieve. Even the CEO said this about their targets, and I quote, "This target is not without risk given ongoing challenges facing the automotive industry with global disruptions to supply chains and logistics. We are taking steps to mitigate these challenges, however, and look forward to the launch of the Grand Touring, and Pure versions of Lucid Air through 2022, end quote. So let's take Lucid's 2026 projections with a grain of salt, which would equate to around a quarter of Tesla's 2021 production, close to half their revenue, and about the same gross profit margin. So, would this mean that Tesla should be worth a fourth as much as Tesla? Well, overall, this is very hard to say, but I would say no, not at all. Tesla is a way more valuable company because they do more than just make electric vehicles like Lucid does. Now, that is not to say that I do not support Lucid, because I do own and support Lucid, but I don't think that they're able to dethrone Tesla in any way. But comment your thoughts down below if you agree or disagree. As an EV investor, which the majority of my portfolio contains electric vehicles, it's important to take advantage of all aspects of the EV market. For instance, I personally am invested into charging stations, hydrogen fuel cell stocks, lithium stocks because that's needed to make electric vehicle batteries, battery recycling stocks and companies, and even some legacy automakers. But with that being said, I also have a lot of EV companies, which gives me a good mix between companies such as Lucid, NIO, Tesla, and many more that I'll talk about in later videos. I do this for diversification because, for instance, NIO doesn't have just charging stations, they have battery swapping stations, so it makes them unique compared to Tesla. Likewise, I like Lucid's battery technology better than Tesla right now because I believe Lucid's battery technology is more advanced than where Tesla is right now, and I'll explain more later. I also want to add that it made very little sense for Lucid to release a lackluster earnings report where their earnings per share came in at a loss of 42 cents, which is way worse than what analysts estimated, because analysts estimated a loss of only 25 cents per share. But despite that earnings report loss, the stock price still skyrocketed by 24% in a single day, and it's up over 117% for the month. Now, there are multiple reasons for this price spike, mainly due to the delivery of the Lucid Air vehicle on October 30th to customers, which cost around $77,400 with a 520-mile range, which beats Tesla's Model S, which sells for close to $91,000 with a range of only 412 miles per charge. Lucid also had an increase in positive reviews about their vehicle, on top of an increase for the reservations for the vehicle. Now, I would say at this moment that Lucid has better battery technology and range than Tesla vehicles, but Tesla is already working on a battery with Panasonic to increase their vehicle range by up to 54%, which equates to a rough estimate of an extra 222 miles per charge. Tesla also beautifully utilizes economies of scale, which basically means the more volume and more units that they produce, the cheaper those units become. And this is how they can make an electric vehicle one day that's going to be valued and sold for only $25,000 because Tesla can actually do that. And this just goes back to Tesla's main advantage, which again is their manufacturing capacity. Now, it's safe to say that Tesla, Lucid, and NIO are all leaders in their own respects, especially when it comes to battery technology, because legacy automakers like Volkswagen has an upcoming ID.5, which has a range of 320 miles, and Toyota has an all-electric SUV named the BZ4X with a range of 310 miles. However, this does not compare to Tesla, Lucid, or NIO and how far their vehicles can go on a single charge. But again, I'm gonna have to give the advantage to Lucid here, and here's why. When I look at battery technology, I'm looking for battery efficiency and not battery size. So let me explain. Yes, you can fit more juice into a larger battery, and that will make the car go for a further distance, but I'm not measuring distance, I am measuring efficiency. And this is what I mean by that. If you build a bigger battery, yes, the vehicle can go further, but a more efficient battery can have the same size battery and yet make the car go further. The Lucid Air has an efficiency of 4.5 miles per kilowatt hour, and Tesla only has 4 miles per kilowatt hour at this time. So if two cars have the same size battery, I'm judging efficiency, and the one with the most efficiency is going to make the car go farther. So right here at this time, the winner is Lucid. Even though all three of these companies, NIO, Lucid, and Tesla, all have new batteries in the works, I'm talking about batteries that are in their cars right at this moment. And I know this is going to change, so if you look back on this video from the future, I'm just saying that Lucid was in the lead for battery technology at this moment. Now, I do know that both NIO and Tesla have batteries that can go over 600 miles per charge, but they have to be in a vehicle sold openly right now for me to actually count it in this statistic that's clearly going to change as time goes on. I also want to quickly go over the TSLA stock has a high-end price target of $1,400 for 2022 and up to a $3,000 price target by 2024, if not even higher, especially if we count Cathie Wood's predictions. On the other hand, we have the LCID stock, and an analyst from Citigroup has a price target of $57 per share for 2022, which is a huge upgrade from their original $28 per share price target. But the actual highest price target that I could find with Lucid by a reputable analyst was $60 per share. And again, NIO, Tesla, and Lucid all still have tremendous amounts of upside both this year and the year following, and even in the long term. So I hope it makes investors very happy because the electric vehicle market right now is on fire. I also want to talk about NIO, who had an at-the-market offering of 53 million shares, which have caused its share price to pull back, but a catalyst is coming up for NIO, which is their NIO Day, where they present their newest models of their vehicles and their newest technologies. Analysts are currently very bullish on NIO with an $87 price target, which is more than double its current price. So in summary, Tesla is like the blue chip EV stock, Lucid is a long-term hold, and NIO should give us short-term explosive growth here and there, and it's going to be great to trade off of, with potentially even greater long-term potential. But what do you think? Comment your thoughts down below. Remember to like this video right now, subscribe if you are new, and I will see you in the next YT video.